Hello, fellow Rebel Capitals Pro members. Hope you're well. Got some house cleaning, or is it housekeeping, do they say? I think it's housekeeping. To start, let me go ahead and do a screen share before I get into the questions. And there we go. So, for those of you who haven't heard, I am replicating Rebel Capitalist Pro on the school platform. Why? Because it is awesome. That's why. And unfortunately, the platform we use right now, which is called Discourse, which is this, sucks. It's brutal. The user interface is terrible. Now, we don't really have a choice. And when we set up Rebel Capitalist Pro, like this is the best that was there. But now they've got new platforms, one of them being School, which is infinitely better. And it has an app. So you can engage with me like constantly. Like you literally have direct access to me on that app. So how do you, and obviously you guys don't need to pay for it because you're already paying for Rebel Capitalist Pro. So this is just basically a carbon copy of the content that you have in Rebel Capitalist Pro, but it's on the School platform instead. So Sebastian sent everyone email invites to join us on the School platform. So definitely check your email, see if you've got it, make sure maybe it went in the spam folder, and I'll have him send out more emails next week just until we get as many people as we can. I think about 50 or so people have joined us over on the School platform. And again, it's free. It's no additional cost because you're already paying your subscription, your monthly subscription to be a Rebel Capitalist Pro member. It's just basically I'm taking the content from this platform, which is called Discourse, to the School platform. Oh, he's got you're invited to School. Yeah, right here. So let me show you guys really quick before we get into the questions. Here we go. So when you reply to that email or click on the link to join us on the School platform, it's just you got to set up a quick profile, like give them your email and your name or something, and then you have a profile on the School platform, and then you just go right into it. Rebel Capitalist Pro will be right here. So just click on it, and this is the new homepage. Clean, easy, just a straightforward user interface. And it just starts with the community tab, and you got all, and I have a start here thing, just giving you a video tutorial of how to kind of navigate the School page. But honestly, you wouldn't even need this. It's so like intuitive. But general discussion, that's where you can go ahead and just ask any question. And it's just like Facebook. So you ask the question, make the comment, and then people can just reply to it just like a Facebook post. And you put GIFs, you can upload videos, you can put links, anything you want. And it's just, and again, what's fantastic is you've got the app. So you download the School app. Let me just show you on my phone. So it's this School app right here. I mean, you can see it if you go to the App Store, and then you open it up, and it just takes you right to the homepage, right there. So you can watch any videos, live streams. You can watch, archive. You can, how we have the MP3 of the research from Lynn and Chris. You can listen to all that just like a podcast, just on your phone at the gym, anytime you want, instead of having to have a laptop or a desktop. So you just go over here to research. Boom, you got Lynn. If you want to read it, here's the PDF. If you want to listen to it, here's the MP3. Same thing for Chris, obviously. We've got the model portfolios. You just click on it. Just click the link. Super straightforward. And I actually need to put mine up there as well. Oh, this is Lynn's top 12 stuff. I thought that was Chris's. Okay. Well, so Sebastian is in the process of kind of porting everything over. So we need to put mine and Chris's model portfolios up here as well. Then you go over to Classroom. So we're in the community tab right here, and these are just the different categories. And then if you go to more, you can do the Q&A archive. So that's kind of where the Q&A archive lives. So if you don't get to listen to it live, you just go here and you can listen to the replay. And when you click on that, you'll not only have the replay, but you'll have all the questions that were asked as well. As soon as we start getting questions on this platform, right now I think all the questions are still over on Discourse. And then you go to the tabs, Classroom. So the last two explainer videos that I did as an example right here, and then you just go back, and the Rebel Capitalist live presentations all right here, as well as the panel discussions. And you go to the calendar and you see all the upcoming events, mostly live streams. And then if you want to go there and ask a question, you just go here, and Sebastian will put the link. That's not a good example. The better example would probably be right here. So there you go. So right here, you click on it. You say, oh, I want to ask Jason a question. You go over here and you just ask the question right here in the comments. Another cool thing is you can see other members. You can DM them right here. And this is super, super cool. And for those of you who are really concerned about privacy, I totally get it. You can opt out of this if you want to, but it tracks your location based on your ISP, I think it is, within 10 miles. So it doesn't pinpoint you specifically. So if you're, let's say, traveling to, so there's Kevin right there. So if you're traveling to Clearwater, as an example, on business or something, you can just DM Kevin and say, hey, dude, you want to grab coffee or something like that? We can talk about Chris's last research report or George's last whiteboard video or whatever it is. Really, really cool. And then we've got leaderboards. So the more you engage, the more points you get. And then I've got to think about bonuses, but I'm going to have a bonus at each level. And I think the top level is like 9. So the bonus there will be like an expense paid weekend coming down to Medellin or something like that, hang out with me. And that's just, I'm just throwing it out there. That might be what it is, but it'll be something like really, really cool. So each level will have a bonus that will get gradually like better and better and better. So there you go. I mean, what's not to like? I'm so excited about this new School platform, and Rebel Capitalist Pro now on School. So anyway, that's enough of that, of the housekeeping. Just wanted to invite you guys over, and those of you who are Rebel Capitalist Pro members. And again, just look for that invite, from that email invite from Sebastian. Okay. So let me do one thing here. We've got something is off. Just bear with me 2 seconds, guys. Let me just see what. Okay. Yeah, that's the problem. All right. Well, this video was set up incorrectly. And as you guys can probably tell, and what I can tell by the chat, is this was set up for the public. Usually these live streams obviously are private. I guess there's nothing we can do about it now. So for those of you who are not Rebel Capitalist Pro members, you get to watch a Rebel Capitalist Pro live stream. It is what it is now, right? Okay. So let's go ahead and get into the questions. Okay, so first question here. Hey, George, I'm tossing, and I'm trying to, I'll hide the people's names here because I know this is public. I'm tossing up on moving into 2-year short, 10-year trade. A long 2-year. Okay, great. So the spread trade or the steepener trade, or just to be long SP with cash position, portion long NVIDIA, short Google. I don't know about the, I'd be careful with the short Google, long NVIDIA now. I don't, that was just a very short-term trade for me, just to be super, super clear. So I'm not in that anymore. So just kind of be careful with that one. I'm less inclined to be heavy into Nvidia trade. Yeah. Okay. Cool. I'm much, much, much more excited about the spread trade, the long 2 year, short 10 year. I've actually added to my position as it kind of goes as far as the spread. It's about maybe 53, 55 right now. So anytime it gets down to 45, I kind of add to the position, or I have been in the past. I don't know if I'll continue to do that in the future. But the bottom line is that's a position I still have. With the long Nvidia, short Google, I'm out. Next bit isn't a question more clearly the head. Okay. Just wanted to share the exercise I did looking back in the SP 500 history. The long time high status could last, breaking uptrend if downturn occurs for more than a couple months. Interesting to see, given the current all-time high territory, that could persist longer than we think, especially given all-time highs more often than not reverse for confirmed twos, tens inversions, which don't currently have. You're right, but they don't really reverse until after the twos and tens uninvert, and that we do have. Usually from a bull steepener, which we've had over the last year. This, though, that the longer high, great. Okay. So let me see. Looks, though, that the longer the high, the greater the fall, generally speaking. That would make sense. So, I mean, I think this is a great observation, but I don't know. I I don't know that I'd do anything differently as a result of this observation. I still think I just because again, what we've got to try to avoid is asking ourselves, is the price going up or down? As opposed to, is it cheap or is it expensive? Now I'm talking about long-term investing. For a trade, for a quick trade, like the NVIDIA Google, then that's totally different. Totally, totally, totally different. But I don't know if the S&P 500 is going to go up. I don't know if it's going to go down. I mean, the trend looks like it's higher for sure. But then you've got all the other things with the interest rates, these esoteric markets, like the stuff that we talk about on this channel all the time, whether it's curves or negative interest rate swaps, etc. So all I can do is just say, okay, well, it's super expensive right now, so I just don't want to play. It's not that I think people, especially not really with Rebel Capitalist Pro members, but on FinTwit and then social media, it's like they have this binary worldview. Like you either have to be 100% long the S&P 500, or if you're not that, then you're 100% in cash. And so if I sit there and say, well, the S&P 500 is overpriced and I don't really want to play in that game. Oh, well, then you're missing out on all these gains. No, not really. It doesn't mean that I'm all in cash, right? So I just think what I would prefer to do is try to find things that are a little bit cheaper if I'm going to go long, or where I've got a little bit of an edge as far as the probabilities. And that would go back to the spread trade, or looking at things like, the stuff that Macintosh talks about all the time, like Argentina, like Argentinian banks, or I don't know what he's been talking about recently. Let's say Chinese tech, or the Greek stock market. He and I discussed that the other day, and I had no idea. That was news to me, right? That theory, and I think that's worked extremely well for him and his portfolio. And if you guys have been following his research, you might have got in on that one as well. Definitely under the radar. I guess that's the best way to say it. I would much prefer to invest like Chris and Lynn, where you're in, but especially Chris, because Chris really gets into the weeds and he really finds things that nobody knows about. and it's way under the radar that people are unloved, unnoticed, and he'll find value there. I would way, way, way rather do that than go long the S&P 500 just because I think it's going up. Because at the end of the day, it might go up for sure, but it's just way overpriced. That's for long-term investing, and I want to be very, very clear. And that's Chris's game. If I come out here with like a like the let's go back to the Nvidia Google thing. That is not a long-term position. That's just a real quick, I was going to keep it on for about 2 or 3 months. I ended up keeping on for 3 or 4 weeks. Hey, George, what are your thoughts on new Bitcoin treasury companies? Do you have any concerns? Of course. I think the argument for the Bitcoin treasury companies is my biggest concern. And the argument for them is, look, it's just brilliant. I forgot to hide the names. Sorry, guys, for those of you who I should be hiding these names if I can't really do it though. So sorry about that to the Rebel Capitalist Pro members. The argument for it is this is just really awesome financial engineering. And I'm like, I thought financial engineering was a bad thing. But now all of a sudden it's a good thing. Like I don't get it. I don't understand, because if I would have talked to you about financial engineering like 3 years ago, by the way, if I would have talked to people in the Bitcoin space about financial engineering, 3 or 4 years ago, they would have said, "Oh, yeah, bad. That's Wall Street. Yeah, stay away from that. That's why you want to buy Bitcoin." That's why not your keys, not your Bitcoin or whatever. But now all of a sudden financial engineering is great. And it's super awesome. I don't know. I can point to a lot of times in history where financial engineering has ended badly, very, very badly. Maybe this time it's different. I mean, obviously it's all predicated upon the Bitcoin price going up. And I don't know that that's a given. It's funny. That's another thing too. Whenever you hear people that are bullish on these Bitcoin treasury companies, they always talk as if the price of Bitcoin going up is a 100% guarantee. That's a given. So being that's a given, why would you not mortgage your house to buy Bitcoin? Why would you not, lever up and create a Bitcoin treasury company? We all know the price is going up. Well, maybe, but there are no certainties last time I checked. And so I don't like it. I think Chanos has a good argument that I don't know that his whole argument I would agree with, but his argument that, the more these treasury companies that pop up, they're competing for a limited pool of capital at the end of the day. And so you are robbing Peter to pay Paul. I don't know. I don't think there's an infinite amount of capital that wants to go into one of these treasury companies. Again, the argument for that would be that Bitcoin price is just going to continue to go up forever. And maybe, but I don't see why. Let's just say the price does go up forever. Okay, I don't see why that we can't have a year where we have a 50% retracement. Why not? And if we do that, then do you think there's going to be a massive amount of capital going into these Bitcoin treasury companies? Probably not. There's going to be a lot of capital flowing out of them, because it's all, I mean, at the end of the day, let's be honest, the majority of capital that's going into these Bitcoin treasury companies, it's hot money. I mean, it's hot money. Now, maybe not the capital that's going in that allows them to buy the Bitcoin, like, what Saylor's doing with his preferred shares and whatnot. That's not hot money. But as far as the people that are buying it, that create this delta between the NAV and where it's trading, that's all hot money. So that can leave as fast as it came in. And again, maybe the financial engineering works this time. Maybe it is different. Maybe people can create wealth without working. Maybe people can create wealth and there is a free lunch. Maybe we can all just get rich and we don't have to work for it. And we don't have to produce more goods and services. We just magically get rich. Maybe, but I really wouldn't bet on that. And so it takes me back to the last question that it's like, why do that when you can invest in an Argentinian bank or something that's totally off the radar, that's cheap? Seems like a recipe for another FTX, or yeah, I mean, it is a recipe for that. Now, whether that happens or not, I don't know. Where are the revenue earnings coming? They don't have them. See, this is another thing that the people that are bullish on these treasury companies, they don't talk about. Because, okay, if you sell equity, that's fine. But a lot of these treasury companies are selling debt. And, okay, so it's zero interest rate debt. Okay, well, not all of it. So in order to service this debt, you have to have money, right? You have to make your interest payments. And I get it. Not all the debt they take on would fall into this category, but a lot of it does, right? So you have to have cash flow in order to service the debt. Now, a lot of these companies don't have the cash flow. They don't have the cash flow. And a lot of them, I doubt, even have positive cash flow. So where are you going to get the cash flow to service the debt? Well, you say, oh, well, you got all this Bitcoin. So basically what you're saying is the only way you can service the debt is if the Bitcoin goes up in price and then you borrow against that equity to pay off the existing bondholders. And then the next time that happens, the price of Bitcoin just has to go up again. So you continually extract this equity as though it's like an ATM to pay off the existing bondholders or to make those interest payments because you don't have the cash flow from the underlying business. Okay, again, that works until it doesn't. What if we go for a year again when the Bitcoin price goes down? How are they going to make their debt payments? There's only one way. They're going to have to sell Bitcoin. That's it. And what does that do to the price? You have this, does that create a kind of a feedback loop? Maybe. But these are the things that I don't hear the people that are bullish on these treasury companies talk about. They just, like, in fact, I don't know that I've ever heard them talk about the fact that a lot of these treasury companies don't make money. Like their underlying business is not profitable. I don't think strategy, MicroStrategy, I don't think that's profitable. I mean, it's very vague, right? But I don't think they are cash flow positive. So the only way they can, and if they are, I don't think they make enough to make the debt payments. Maybe they do, but it's tenuous, let's say. So where do they get the money to make their, what is it? I think the preferreds have like a 8% yield, 10%, something like that. Where do they get this money? Well, they just have to borrow against the Bitcoin going up, or they have to issue more equity. It's just more financial engineering. It's just it's very similar to a Ponzi scheme, I guess, in that way. You know, not the Ponzi scheme doesn't have the underlying asset, obviously, so it's different. But in a way, it's the same. That you just there's no money coming in. There's no profit. There's no. The only thing that's there is the appreciation, and that's how everything works. So without that appreciation, none of it works. That for me, that's a big bet. That's a bet that I wouldn't want to take. I'm still a big believer in Bitcoin long term. Yeah, then hold the Bitcoin for heaven's sakes. Forget these. And if you love Bitcoin that much, then just buy the Bitcoin with leverage. I mean, I wouldn't do that, but why take the risk with these Bitcoin treasury company? I just don't. It doesn't make sense to me. To me, it's a mania. But Bitcoin treasury makes me think things maybe get overextended. Yeah, I agree. But I think everyone should own Bitcoin. I think it's fantastic. But own the Bitcoin. Don't play with the financial engineering game. 2 questions. Let me make sure we're okay. QE was something that didn't exist before GFC. Eh, uh, kind of. I mean, the Fed had open market operations. So when the Fed would, as an example, back in the late 90s, the Fed would look at the rate of borrowing, or excuse me, the rate of lending within the banking system, and it would try to determine, based on the existing amount of bank reserves, how many additional reserves would be required to satisfy the needs of the banking system. So then let's just assume for a moment they said, well, we've got 1 billion too few bank reserves. So then they would go out there and they would buy treasuries and to create those bank reserves. That's QE. That's QE. But they just didn't do it to the extent that they're doing it now, and they did it only to try to micromanage the front end of the curve, which was stupid because I don't really think that the banks were using those bank reserves to begin with. And a lot of people think they get it backwards. A lot of people think that the Fed creates the bank reserves and then the banks have the liquidity and then they go ahead and lend on top of that. It's the opposite. The banks lend and then the Fed would create the bank reserves to meet their lending. So the banks were never, ever, ever constrained. Now, like I said, there was just a minute amount of bank reserves as an example. And we're talking about the electronic reserves at the end of the day, because that's what banks are really using. They're not using vault cash for settlement. In 2007, there was $10 billion worth of banks. So when I talk about them doing open market operations, I'm not talking about them, adding $500 billion to their balance sheet. I'm talking about them adding literally a billion or two here or there, like nothing. But the process was the same, in which the way that they would increase the amount of reserves if they felt they wanted to, they would just buy treasuries or mortgage-backed securities or something like that from the banks. Let's say here. Okay, right. It was imagined up and implemented as a way to drive the market forward in a fake manufactured fashion and avoid prolonged crash, as I understand. I mean, that was the idea behind it, but again, it's open market operations to a much greater degree. That's really all QE is. People didn't see QE coming for the most part, and now we're in the bubble that seems to be coming to an end. Doesn't imagine another. Wait a minute here. If someone doesn't imagine up another idea like it, okay, got it. So now that I hear the U.S. GOVT has a real option of driving up gold price to 20,000. Okay, so the U.S. government got it. Just revaluing gold. That's what that video was talking about. And I don't know that that's my base case. It's definitely not my base case. I don't know what the probability is, but I was just really trying to explain Luke Gromen's view because I think it's interesting. That's what I was doing on that whiteboard. It seems like that would be just the kind of thing that would keep the crash at bay and save us. I don't know if that would really do anything, honestly. I don't know that would. I don't know why that would be beneficial to the stock market. I mean, Luke sees it as very inflationary because the people with gold now have, all this additional purchasing power. But I don't know that really, like, as an example, let's assume for a moment you own gold. I'm sure you probably do own gold. Um, and let's just say next week gold goes up to $10,000 an ounce. Are you going to sell it to buy stocks? Yeah, maybe. I mean, you're going to have to take a massive capital gain tax. You're going to have a huge hit there. I don't know. I don't know that many people would go ahead and do that. And then Luke believes that the government's going to it's going to create inflation, and they're going to have to do basically yield curve control, and that's going to increase purchasing power because all these people are selling treasuries, and it's like they're going to take those and buy stock. I don't know. And again, in that video, it wasn't necessarily my view on things. It was more so I was just doing my very best to explain Luke's view, and then buying down the debt. That was another component there. Okay, but let's just say you've got 5 trillion sellers, or 5 trillion of selling that would happen. They'd buy the debt, they'd bring it down, or at least they'd let it mature, and they wouldn't roll over the debt. So then there would be an additional $5 trillion. But is that going to be any different than having a treasury, especially if you're a pension fund or a hedge fund? Is it that much different if you have dollars versus treasuries? You say, yeah, George, you can't buy stocks with treasuries. Right, but you can just repo it and get the cash and buy the stocks. So I don't know if that really does much. And we have to understand, mechanically, QE did not make the stock market go up. I don't believe that. Now, you can sit there and look at a chart of the Fed's balance sheet, a chart of the stock market, and you can see it's maybe a 60% correlation, something like that, since 2008 or so. But that argument has never made sense to me, and I'll tell you why. Because if you look at the increase in the stock market using S&P 500 as a proxy from 2008 to 2020, you see that it went up by, I can't remember, let's just say 100%. I don't know what the number is, but I'm just using that as a hypothetical. And people say, okay, it went up because of QE. There's all this money sloshing around. That's what people say. There's all this liquidity sloshing around. And that's why it went up by 100%. Okay, well, number one, the argument there is that interest rates go down and people are going to sell their treasuries and then take that money and try to get a better return in the stock market. All right, but every single time the Fed did QE, interest rates went up. They didn't go down. So how do you square that circle? Number two is, if you look at the S&P 500, the increase from 1990 to 2000, it actually went up more in percentage terms than it did from, let's say, 2010 to 2020. And that's no QE. So you see what I'm saying? Let's just say that in the 90s, it went up by 120%. In the 2010s, it went up by 100%. But when it went up by 120%, there was no QE. So based on that alone, you can't say the QE actually made the stock market go up, because there's times in history where the stock market went up by a greater degree with no QE at all. So maybe it did, but maybe it didn't. It's not a foregone conclusion like people say it is. And the other thing that I would add, like I said, is their whole rationale, and they get this from the Bank of England. The Bank of England explained this in 2014, and it was completely contrary to the evidence. They said that, the reason they do QE, one reason, is to bring down the long end of the curve, bring down rates, and that, helps the economy. And it, pension funds, they sell the treasuries because they want to go into stocks because the treasuries don't make sense anymore. And this assumes that interest rates go down when they do QE. And like I said, the opposite happened. The opposite happened. So I don't know that there's no evidence that I can see that would lead me to believe, outside of just coincidence, QE does anything for stocks. It's like maybe psychologically it does, but mechanically it doesn't. Okay. Making money, are we never ending bubble? Yeah. So I guess to answer your question more specifically, I don't know that revaluing gold and paying down the debt, I don't know that would really, because see, that might make interest rates go up. Yeah, I don't know that my base case would be that just stocks moon if if that happens. Now, what I was saying the other day, I think in the Trump video, is if the Fed, if he gets in Scott Bessent, and if Scott Bessent can control everything, I don't know that he could, but let's just say that he has his way, and obviously he's a yes man, and he drops rates down to 1%. Now we're talking. Now the stock market's going to rip. Now that gold is going to, you might not even need to revalue to take gold to 20 grand in that scenario, and the dollar's going to tank. Now it's not going to, quote unquote crash. We're not going to have hyperinflation or anything like that. When I mean tank, probably go down to the 80s, something like that on the DXY. But yeah, so the big interest rate drop that I talked about on the last whiteboard video, I think would have much more of an impact and a tailwind to what you're talking about than what I discussed in the video prior to that, which I believe was just the revaluation of gold. I don't understand the corporations buying up Bitcoin. Why are they doing it and not gold? Because no one cares, because it's not gold's not in a mania. Why would you not buy Bitcoin if you're one of these? Look, I get it. If you're one of these companies, the fastest way to make your share price go up by 100 or 200 or 300% is just buy a little Bitcoin and just say, oh, I'm a Bitcoin treasury company now. It's just like the ICOs. Remember that in 2021, was it? Where all a company would have to do is say they're coming out with their own coin, their own, what is it, initial coin offering, I think it was called. But all they would have to do is say that they were coming out with their own coin, and their share price would go up like 10x. And it's just because it's in a massive bubble. So everyone's like, oh yeah, we're now we've got the Kodak coin or whatever it is. Now we've got the Hertz rental car coin, and it would just go up. And it's the exact same thing with these corporations buying Bitcoin. Or if they say they're buying gold, no one's going to care, and their share price isn't going to go up. But if you're a CEO that's got a bunch of shares and equity, and your compensation package is based on the share price, and you don't want to work, like you got two options there. Number one, work hard, produce more stuff, and try to increase your earnings and hope that the market pays attention to that. That's hard. Who wants to do that? When you could just do nothing, not even go to work, just fire everyone and never get out of bed and just buy Bitcoin and have the share price go up 5 times. Which do you choose? See, that's that's what we're dealing with right now. Hi, George. The opportunity to enter into oil, gas, well, investment, U.S.-based company that has 50-year track record, same type of stuff that Kiyosaki does. I will be able to deduct 90%. In other words, if I make a $100,000 investment, I can deduct. Yeah. Okay, I got it. There are a bunch of write-offs. Okay, I get it. The estimated returns, 12%. Okay, got it. The well will begin operation 2026. Okay, got it. I realize this is just brief summary of the investment. What does your gut tell you? I have no idea, Tony. I don't know anything about these, honestly. Who would? Chris might. I doubt Lynn does. There's no way Patrick does. Jason's not. Actually, you know what? Hartman might know about this because he's done some kind of alternative investments, let's say, for tax stuff. Brent's not going to know about this. So I would probably ask Chris on his next live stream and maybe just try Jason. I think he has a live stream tomorrow, Tony. So just ask Hartman tomorrow if he knows anything about that. Because I know nothing. I've heard Kiyosaki talk about it, and that's it. I've never researched it. I mean, the first thing that would come to my mind is if it's this great, like why is everyone not doing it to bring down the returns closer to the risk-free rate, which let's just say is 4.5%, you're being paid an additional 7%, let's say, or 8%, because there is additional risk. That we know for sure, or else you'd be paid the same as a treasury, maybe even lower because of the tax benefits. So something there's some risk there, obviously. That's why you're getting the 12%. I just don't know what it is. I'm currently holding on to a lot of different 30-year treasuries, dry powder, anticipating rate cut. That what is the probability it would see 10 or 30% correction on top of the S&P that we would see this year? I have no idea, but I see. I much prefer, if you're going to be in dry powder, why not be in short-term T-bills? Then you have no interest rate risk. Because think about it, if you're using 30-year treasuries for dry powder and stuff gets cheap and you have to sell those treasuries, what happens if the interest rates are higher? Then you've got to take a big haircut just to get your dry powder to buy the cheap stuff. Now, is it likely that if we had that big of a correction that rates would go down? Probably, but look what happened when we had the whole tariff tantrum. The rates went up and the stock market tanked by 20 or 25%. So I don't now, if it's a speculative play and you just want to have more of a price move, then the 30-year makes sense. But that's way different than your dry powder. And I can't tell you what to do, but for me, if I have dry powder, that's going to be in the form of short-term treasuries, 3-month, let's say, and just roll it over, because I don't want to take that interest rate risk if I have to sell the treasury to buy whatever it is that I want to buy inexpensively. That's the whole point of having the dry powder. As far as the probability that we see a downturn in the S&P, I have no idea. The only thing I can tell you is that it is expensive. I have no idea if it's going to go up or down. Hey, George, been following Junior Mining Company for the past couple of years, BLAGF, currently 49 cents. Wow. They're based in Canada. And according to the reports, verge of starting production of 15,000 ounces. Positive cash flow. Curious if you've heard any. No, I haven't. No, that's a little too speculative for me. I don't know that business. And like Doug Casey says, it's the worst business he's ever seen in his life. It's, what is he called, a choo-choo train business. And most of these things fail. Most of them go bust. So if there wasn't a high probability that this thing goes bust, I don't know that they'd be trading at 49 cents. It's probably whatever information's out there, unless you have insider information, which even if it's legal insider information, you would need something like that so that you had some sort of edge. If all you have is the information that's available to the market, it's most likely priced in. So, yeah, I mean, if you want to take a flyer on it, but to me, that would be similar to taking a flyer on Fartcoin or Trump coin or Melania coin or something like that. It's just a total kind of roll of the dice. Maybe I'm wrong. Like I said, I've never heard of the company, and the best person to ask about that would probably be Chris or Lynn. But honestly, I think they're probably going to tell you the same thing. Even if they know about it, they're probably going to be like, yeah, you could get a 100-bagger, but there's like a 90% chance that you lose money. So if you're cool with those odds and you've set up your portfolio accordingly, then great, go for it. But you just got to know what you're getting into there. And I don't know what that is because I don't know what the company is, but I'm almost positive that Chris and or Lynn could clarify, and probably I would assume that both of them, especially Chris, are familiar with that specific company. So the bottom line is I would defer to them and just suggest you going to the school calendar. Make sure you go to the school calendar, and then you just, oh, there we are. Just find when. So we're right here on the 20th. Oh, so we got Lynn on the 22nd at 3 p.m. So just go ahead and ask Lynn. Just go to the school calendar and then just click this. And then just go ahead and put a comment right here. And that's what she'll see. And that's the question she'll answer. Okay, please advise if you're going to buy into the silver. Not yet. What would you buy and at what price? Also, would you buy Sprott Physical? Oh, yeah. Yeah, if I was going to buy silver, that's how I'd do it. So the ticker on that is just, I'm sure you know it, but just for the viewers, other viewers. Okay, I got it on my watch list. PSLV. PSLV. Okay, and then now I think he's responding to Tony, which is nice. If this is U.S. Energy, I've invested good returns, except when one well has shut in due to operational issues. Tax benefits are great, but make sure your CPA agrees, knows how to do the forms. They do offer publications, help for CPAs. Keep in mind, CPAs can be costly. Yeah, okay, that's some great advice. All right, I think that's the last question. So um, these are not available to the public, but as you guys can tell, we hit a wrong button there or something. So you guys got to see what it's like to be a Rebel Capitalist Pro member and have direct access to myself, Lynn Alden, Chris McIntosh, Brent Johnson, Jason Hartman, and Patrick Ceresna. So I guess I'll just use this opportunity to do a shameless plug. If you guys are interested in finding out more or how to be a member, you can just go to school and you can go to school and what you'll do if you'll go to the About Us page, which is right here, and this is basically our sales page. So you can watch this quick video and then you can see what's inside the live stream Q&As, the exclusive stuff, and everything that I discussed. You already know how to navigate, so that's a big bonus. And it's just a tremendous value. I think it's the best value in the research and investing game or space. $97 a month, and you get direct access to all these people: me, Chris, Jason, Patrick Ceresna, Brent Johnson, Lynn Alden. Can't beat it. You've got Lynn and Chris's research that's included. And then you've got the model portfolios. And then you've got these live streams and an incredible community of like-minded individuals. So that's my sales pitch, guys. Go register, go join. You won't be sorry. It's the best thing that you'll ever do in your whole entire life. I guarantee it. All right, guys. Enjoy the rest of your evening. As always, make sure you're standing up for freedom, liberty, free market capitalism. We'll see you in the next video.